Hello, traders. Welcome to this live FXDD webinar with myself, Chris Svorcik from Elite Currency on this 18th of December 2019. We're getting close to the end of a decade, a year and a decade, and moving into the third decade of the century. What will 2020 bring from a trading perspective? Something we'll definitely discuss in a different webinar. Now we still have half of this month left. So got still some things to discuss before we dive into the very long-term perspectives of how this year worked out, of course, and how next year could work out. So before we continue, this risk disclaimer explains the fact that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for informational and educational purposes only. All right, if you are subscribed to the FXDD YouTube channel, that's great. And you know that we have video analysis uploaded there regularly and also the recordings of the webinars. If you're looking at this recording, you might wonder, how can I join the live webinars? That's something you can do as well. Check out these two links, top one for webinars like this, live trading webinars, and the bottom one for live educational webinars. All right, so hope to see you then, just like we see now live audience as well. Hi, Ali, good to see you. And you can join as well. And of course, if you can't make it, then it will be recorded, and it is recorded and of course uploaded to the FXDD YouTube channel. All right, so let me switch gears now and take a look at those charts. Alrighty, there we go. Yes, so euro-dollar. All right, let's zoom into the 1 hour chart. It did retest the 20-day, then we got a bearish candle, and we did have a follow through on that. Not too much. Looking at 18 pips to the downside before price moved up. Euro-dollar volatility is slow, very, very slow, as you can see. The break of the weekly pivot point, the break of the 144 EMA, the bounce at the 21 EMA, all of that normally, typically should see more follow through, but it only moved 18 pips. Now, true, the move down is in a way counter trend when considering the 4 hour chart, so that could be part of it. And this upside might be a retracement for more downside, but boy, is it slow and it is very tedious. So euro-dollar is really not a fun pair to trade at this moment. We did get this break, and we might get a follow through down to 110.50 and then 110. If we get a follow through below the weekly pivot point down to the S1, the S2. And all in all, if we look at the daily chart, we might be building here a start of wave C after prices finish the wave A, this being maybe an ABC for A, ABC up for B, down 5 waves for C. This process, we already have a fractal here at 112, might be starting. It's just that the breakout here is quite slow. So, I would probably still wait and be careful. Price bounce at 111.10. And have another clear bearish candle on this hourly chart break below 111.20. That could be, a second push or maybe even third push below the 21 EMA. And maybe this time around, price might make a little bit more downside, a little bit quicker than it has so far. So this breakout, really nothing so far. In fact, it hasn't even invalidated the bullish scenario because it didn't move enough. Really, it would have to break at least below 111, if not even below 110.75, really, before the bulls are really out of the way. So for this point of view, that's not even confirmed as yet. If it does show strong bullish momentum into the 111.50 zone, followed by a bull flag, then I would consider the break of that flag to the upside as valid, with a target at 112.50, maybe 112.80. So price has been moving lower, but it's so slow that I can't necessarily say that the bears are in control. I think if there is a clear bullish momentum, it might move up. I am leaning towards downside, don't get me wrong. With downside, I would just need to see, in my view, a clear bearish candle on the hourly chart that can push through 111.20 and close below it. Clear bearish candle Not now. It's getting too close, I think, to the end of London. But tomorrow morning should be fine, I think, for a bearish continuation. The bulls need to prove themselves more. The bulls, I need to see a clear price swing up, followed by a flag, and then it's okay. So there's a little bit more requirement, more, I would demand more from an upside trade. From a downside trade, it could happen sooner, and this upside might be a retracement and a bearish candle below 111.20, 111.15. It depends on when the candle appears. Like if it happens now, I would like to see it break below 111.14, which is the low of last hour. But if it happens later, so if price goes sideways, then a re-break below, it then moves up into, for instance, I don't know, somewhere around here, right? And it gets into 111.35 or 30, right? And then turns, well, then a break below the weekly pivot point is enough. Now it's not enough because of the bullish candle last hour. Now this any candle soon, now or next or the one after, would have to break below the low of last hour at the 111.14. All right, but if it makes a flag, then the break of the weekly pivot point would be enough. I know these are very small details, probably, but that's how I see it with regard to measuring whether this euro dollar bearish continuation will happen. I'm leaning towards yes. I think at this moment, bearish continuation is more likely. But we got to realize that we are getting into the second part of December, and things might slow down. And it's difficult to imagine things slowing down for the euro dollar because it is already so slow. But it could. But that's why we have the pound, luckily, because the pound isn't slow at all. It is massively fast, and there's a lot of volatility. So luckily, there is nothing to complain on the pound side. Really, a lot of momentum, a lot of price movement. Just very strong price swings. So might make sense to focus on pound and pound pairs, really, way more maybe than the euro dollar in the upcoming weeks because of the holidays. Things might slow down, and even if it slows down, and even if price slows down in the pound, that would not necessarily be a big deal because it has moved a tremendous bunch. So even the small movement on the pound now could still be a lot of pips, in fact, because although the bullish bounce hasn't happened yet, I thought that the S1 and the support would provide a bounce. It hasn't happened yet, and price is inching lower. It hasn't moved down a lot either, but it is kind of slowly pushing through that 131 level. So that surprises me a little bit because I did think that the bulls would kick in and retake control here at the previous bottom after an ABC pattern might have been completed. But if price keeps pushing lower like this, it might not be a wave C and it might be a wave 3 because typically a bounce would happen at the 61.8 or minus 100 fib. If it goes much lower, it's really getting a bit too close to that 161.8 fib target, which is typical for a wave 3, not so much for a wave C. So, it's kind of like I was bullish, but it's definitely stronger down than I imagined. I thought that the uptrend was strong enough for price to at least retest the highs. I still think so, but certainly, the continued price movement lower is chipping away on that analysis. If it does move higher, and if it does bounce, I think 130.50 is key, because if it breaks that's the previous bottom here, then it will probably head towards 130. I would say. But if it stays above 130.50 in the previous bottom, there's a lot of space to the upside. If it just makes a move up to the 38.2 fib, that's 132.30. That's almost 200 pips. If it then continues to the 50, another 60 pips. If it moves up to the 61.8 fib, another 60. If it moves up to the 78.6 fib, another 80 or 90. So that's a huge movements there. From current spot to the 78, that's about 350 pips, a little bit less, 340. So huge movements, huge swings, and that would be pretty interesting to the upside, I think. I'm not sure if it's going to happen. I think the odds are still quite high that price will bounce here at 130.50 or at the very least 130 zone for an upside. So if you ask me, if I would ask myself, where's the reward to risk? It's up. I just see a small move down and a lot of support at this, and ultimately quite a lot of space to the upside. It might make it even up to the 88.6 fib or the previous stop. So yeah, it might continue with the uptrend. I wouldn't count on that yet. The downside is now too strong. It might turn into a triangle or an ABC flat. So an ABC flat would be like ABC like this, then an ABC up, and a 5-wave down. A triangle would be this is A, up for B, down for C, up for D, down for E, and then a break to the upside, if it is bullish, of course. So if it's ABC flat or an ABCD triangle, that means 61.8 or 78 for a triangle, and 88 or double top for a flat. So a lot of space to the upside. Let me see what Ali wrote here about the pound. So yes, it's very possible that it might want to tag the psychological level. First of all, it's a round level, 130. It is true that as well, on top of that, maybe we can see that a bit better on the 4-hour chart, is that it was the top of the flag here with maybe some minor levels at 129.70 indeed. That held price so long, and that might be, if price gets there, it is likely to be a bouncing spot. I'm not sure if it will get there necessarily. I think that the 143 main, the previous top here, previous bottom at 130.50 might be enough, but maybe I'm wrong. Maybe it is a fair thought. It makes sense that the market might be pulled as a gravity back to such a strong level as 130. There's a lot to say about that indeed. What I see, Ali's adding with a pity. I was thinking about pound dollar 134.20 as a short. That made a lot of sense indeed. Great stuff. But yeah, I can imagine I would be afraid of the upside too. 134.20, very interesting idea. More aggressive reversal trade, of course, difficult one. From a time pattern point of view, 2, 4, 6, 7 candle here, indicating maybe that swing up is over, but a very, very, very difficult one. Not an easy one to take, and I can understand the hesitation there. I'm not a big reversal trader, but great idea though. It would have worked out nice. Difficult one though because of the strong upside. More profit taking than I expected. I thought that I did expect a bigger correction. It's just that I thought maybe it would go a little bit deeper here and then bounce rather than so quick. So there was quite a lot of profit taking there. All right. Okay. So I talk a lot about analysis from a practical trading point of view. Bullish engulfing twins on the 4-hour chart, whether it's here or 130. Yes, for me, good for upside. In theory, small trade upon the break of 130.50 to 130, maybe I wouldn't be that interested in it. I would rather look for clear 4-hour daily bullish candlestick patterns here for upside. That I think makes the most sense. Dollar yen, in my view at least. Dollar yen looks like it's maybe building some triangle here at the previous, at the double top. And it looks like an A, B, C, maybe a D, maybe an E. I think it's likely to break to the upside. One annoyance in a way is that 110 is close by, and that's a strong round psychological level. So kind of tough to trade that breakout because of that 110 level. Ultimately, though, it is looking bullish at this moment. Price is keeping its head up, and a breakout to the upside probably likely at this moment, right? Higher highs, higher lows, running a little bit out of steam here. But current price action is quite strong. So I'm leaning towards an upside break above 109.65. And then, yeah, keeping a close eye on 110. But it doesn't have to stop at 110. It might stop at 110 on lower time frames. It doesn't have to stop on 110 necessarily with a huge reaction. It could. It's a dangerous level in a certain way. It depends. I think probably best is to keep an eye on the breakout, see if it can break above 110, look for a flag on hourly, and then trade the continuation higher, I think. All right. Pound yen seems to be close to a bouncing spot too, maybe 142.50. Those are the previous highs at 144 EMA, previous tops, the S1. So bounce could happen too, just like the pound dollar here, or a little bit lower. Again, bullish candlestick patterns that show some good size in their candle length from high to low would and should normally send this up. Not necessarily for an uptrend, but at least I would say if not just to close the gap, maybe or close the pivot, hit the pivot point, for instance. Things like that. Retest the previous highs. Euro yen is higher low, lower high potentially at this moment. Could be a triangle too. If it does make a triangle, that would look good for upside as well. Certainly uptrend at this moment. And the continuation to S2 would make sense. All right. Bitcoin. Well, no reversals yet. This surprised me a little bit. I did expect stronger upside. It looks like, again, Bitcoin really retesting, making deep retracements. Let me say it this way. Once it's impulsive, it's very impulsive. Once it retraces a lot. This seems to be very typical behavior for Bitcoin. And it's stuck in a range, and it might take long. It might retrace deep. And it seems to be, these patterns seems to be over and over again. And with price again for the second time below the 61.8 fib, I think very likely to fall down to the 78.6 fib and test these deep fibs. Very typical 78.6 for Bitcoin at this moment. We see uptrend, but we saw a consolidation triangle here, or a descending wedge break to the downside, pullback, continuation. I think 5,400 or 4,300 D spots for a bounce, but then there could be a big bounce, and price might retest the previous highs, or even go up to the minus 272 target, in my view. This or next month, I would say. All right, gold is, bullish trend. 1 second, folks. On the weekly, let's take a look at that. Not sure. Can't change time frame somehow. 1 second. Let me open a new one. There we go. Yeah, so uptrend, momentum, ABC, momentum. I think it looks like a wave 1, ABC for 2, and this is a wave 3. Within wave 3, probably a wave 1, 2, 1, 2, 3, 4, 5. For 3, this is probably wave 4. I'll put the fib from here to here. And I would expect either a bounce here at the 21 EMA and the 23.6 fib, or if it does retrace lower at the 38.2 fib and a bounce up for an uptrend continuation. Next target, at the very minimum, 1659 minus 272 target, but I would expect more, to be honest. Going beyond, way beyond maybe that for a full uptrend. Next fib, though, is 1789 at the minus 61.8 target. So for the moment, looking like a bull flag within uptrend. Question is the bull flag ready, or will it extend a little bit further down? At this moment, there is a little bit of a bear flag within the bull flag. So the question is, will it break the bear flag? Then good chance it might make it to the 38.2 fib. Whereas if it breaks above the 21 EMA, then and the resistance trend line, good chance for, and specifically probably also 1500, I guess, 1495, 1500 here, this zone, then a good chance of the fact that the flag might be over and there could be an uptrend continuation above this bull flag. So a breakout like that would more or less make that more likely. Let me get rid of this gold. Dow Jones is an interesting spot too. I don't have it open at this moment. Let me do that quickly. And it is, yeah, it's pushing higher. I think it seems to be making a ascending wedge to me. Certainly looks like that pattern to me with a steep angled support trend line and a flat top here. Basically about to break for all-time high again. Let's take a look at the monthly, you'll see. What seems to happen is we had a strong momentum, an ABC correction, a bounce, a pullback, and a continuation. And as I said last time, the fact that we had two higher highs that were running out of steam seemed to me that maybe a bigger retracement was likely. That didn't happen. And I changed my mind on that when price made another bounce here, basically. Starting to look too bullish here and here and here. These bounces were too much, I think. So this bounce happened just because of ABC. This bounce happened because it's just a pullback within the new uptrend. And I already said that the next breakout does not have to could go way further than any previous breakout. That so far has happened because only the current price movement is 1,000 points. It last time it broke for a higher high, it didn't make a 1,000-point move. It made 180 here and a 480 here or so. Now it's already 1,000. So that already has happened. It has already made a bigger move than that. But I don't think it's necessarily it. It might continue more than 1,000 at this moment. Strong breakout candle, retrace, didn't break last month's low. And when zooming in, big wick, candles away from the 20-way, everything aligned, price above the fractals. Yeah, everything is aligned here for upside. Break, pullback, continuation. Here too, the continuation, ABC, push up. So looks more or less ready almost right here, right now, in my view. Made a little bit of retracement, but bounced already pretty quickly, I think. I don't see sellers at this moment. I don't know, maybe it could always be wrong with these things. I don't see sellers at this moment. I see buyers stepping in more and more aggressively at higher spots, and eventually, probably in my view, the price will eventually break through the resistance and go for a higher high. Next target could be a simple round level like 28,500. So, and maybe more, I don't know, but 28.5 seems likely to me. Maybe it could go further down to up to 29 on lower time frames. Eventually, who knows? I don't know how far this trend can last. 30,000, obviously, round psychological level. I would expect if it gets there, that price will respond to that with some decline. It is a big level to think about. So that's maybe where in the longer run this uptrend might struggle for a bit at least. Otherwise, pound odd looks also in the bouncing spot, but of course that depends on the pound, obviously. Dollar CAD, that looked like a good breakout to me, and it is so far doing okay. This breakout, pullback, continuation, falling nicely lower towards 131. But target is quite close. It is in a range environment. S2 is the target. So I don't think there's that much space left at 130.80. I wouldn't aim below this bottom. It could easily be bouncing at this bottom, and it's too rangy, I think, to anticipate the breakout yet. Kiwi dollar looks like an uptrend with a bull flag pattern, but I would probably need to see a momentum candle here, some flag, and a breakout probably before trading that. Australian dollar, Um, I was leaning towards a lower low, honestly, with a continuation towards 68, 67, 75, 67.50. It is moving up now, but I think still a little bit too mild. And it is more or less kind of confirming what I was thinking, which would be that it's a bear flag. Now, that would change. I would be open to that, to changing that opinion if it does break above the 50 fib. So it is kind of like, well, it's retraced about the max I would expect to the upside if it is a bear flag. If it pushes more and breaks above the 143 May, breaking above the top of the bear flag, breaking above the 50 fib, it would be breaking above these resistance levels and this supply and demand zone here. Well, then things are not as bearish as I thought they were at this moment, and then I would be open to considering upside trades. I would need to see still some clear momentum, probably push through. Well, we broke above that one already, but still probably some clear momentum above 68.80, followed by a flag and a continuation higher. At this very point, though, the bearish outlook that I have at this moment is not invalidated. I still think it's a bear flag, and a break of that flag, I would expect price to move down to S1, if not further. But you never know with these things. If it breaks above 68.80, 68.75, well, I'm open to trading it to the upside after a flag, and in that case, bullish continuation a little bit sooner than I expected. All right. Other than that, I have one more in mind, and then I guess that's it for today. CAD yen. That's a pity. It's a little bit too late. It moves already quite a lot. I wanted to show you this bull flag pattern that looked good to me, and it looked like a continuation higher was likely this morning, but that was a few hours ago. And in the meantime, the continuation already happened. So yeah, that's too late now. It's more or less on its way. So sorry about that, but can't can't do anything about it. We choose these webinar times already weeks ahead. So, but yeah, that's okay. Well, at least we can see here in retrospect that how the pattern looked like. Could break out here with this or this candle, and a nice follow through so far. CAD looks strong generally, and yen weak, or at least in some type of consolidation. So good upside. One more came to mind, actually comes to mind right now, and that is on New Zealand. I thought maybe a bullish reversal might take place, but I'm not too sure about this. It's looking a little bit too weak. Maybe if price breaks above 104.38, sorry, 104.40, a wave C might happen. But if it doesn't break above that, I would still be cautious. Still be very cautious. Might make an A wave C, but I would definitely wait for that to confirm. That's something that still popped in my mind. Euro pound might be a wave 4 for an upside, but I'm not that fond of it. Yes, Euro New Zealand. Did I talk about that already? I guess not. Let me open Euro New Zealand. Euro New Zealand looked bearish to me. ABC up, and here this looked like price was bouncing and is moving down. It has moved a little bit too much as well, but I think it still could be interesting. It might be a triangle. That in a way is good news, because if it is a triangle, and this is an A, B, it could be an ABC too, but if it's A, B, C, D, E, that means that either price here, or at least at the very minimum above this bottom, should make a bounce up for D, and then down. Wait, A, B, C, D. No, sorry. This is D, up for E. And the end of E spells the end of the triangle. And that could be a huge, interesting move down for one more lower low. I know that trend is really, really extended already. And I understand that. And that's always a little bit of a risk when prices move that much. Look how much it moved already, right? So we're really looking at the big move here from 177. 900 pips, that's not nothing. But if, from that point of view, it would fit a triangle pattern quite well. A, B, C, D, up for E, then down, and make that one more lower low. I don't know. Target, could be 167.50. I wouldn't trade the breakout here because I think that it's a little bit too extended. But I think that trading the wave E, if it bounces up like that, with a stop loss above the wave D, you're at 170. So stop loss above 170, target at 167.50. And an entry, I don't know, I would put a fib probably. I need to see price move up first, but I would put a fib from here to here and 61.8 fib, for instance, or even the 50 fib there, 169.40, 169.50, I think makes sense for a pending order. I could make sense. Let's see if it bounces here. If it moves lower, of course, I will put the stop loss. I will put the fib at the lower spot, obviously, and then the fibs will be also a little bit lower. But I think that these fibs are likely to hold as resistance, and I will put the stop loss above the top at around 170, just a little bit above, a few pips above 170, basically. So I guess that's it from my side. All my thoughts and ideas, obviously, my 2 cents that I'm sharing only. That's about it. We're going to be back tomorrow, actually, with an educational webinar with FXDD. So I hope to see you then and there. Looking forward to that. Wish you all great trading above all, and a great day, of course, and see you very soon. Cheers. Bye-bye.